Hey everyone, welcome back to the channel. If you're new here, hit that subscribe button and turn on notifications because what I'm about to drop today could change how you see the financial world forever. We're talking about a seismic shift in the precious metals market that's happening right now in December 2025. And the mainstream media is barely whispering about it. By the end of this video, you'll know exactly why this is on just a blip at S, a warning sign for something much bigger. Let's dive in. Picture this. It's October 2025, and one of the biggest banks on the planet, JP Chase, sends out a chilling warning to its clients. We have no silver to deliver. Just like that, the first major bank defaults on physical silver deliveries. This isn't some small-time operation. We're talking about JP, a key player in the global silver market, admitting they can't fulfill their obligations. Silver prices have exploded up over 100% this year alone, reaching $64 and heading towards $65 according to Bank of America analysts. But why? And more importantly, what are the powers that be hiding from you? If you're holding paper assets or trusting the system blindly, this is your wake-up call. Don't click await. The details I'm about to reveal could protect your wealth in the chaos ahead. To understand this default, we need to go back a bit. Silver isn't just jewelry or coins. It's a powerhouse in industry, solar panels, electronics, EVs, medical tech, you name it, silver's in it. Demand has been skyrocketing in 2025, driven by green energy transitions and tech booms. Meanwhile, supply is cratering. Mines are struggling with output, and above-ground stockpiles are being drained faster than ever. The big trading hubs are at the London Bullion Market Association, LBMA, and COMEX in New York. But here's the dirty secret. Most of the trading there is paper-based. Banks like JP promise silver. They don't physically have betting on futures contracts to keep the price suppressed. For years, they've manipulated the market through massive short positions, keeping silver undervalued while gold gets all the attention. But in 2025, it all started unraveling. The World Silver Survey from the Silver Institute highlighted a massive deficit, demand outstripping supply by hundreds of millions of ounces. India alone sucked up huge volumes, forcing banks to scramble. And when JP couldn't deliver, panic hit London. The market broke, as reports called it. Silver's up 100%, gold's up 65%, but silver's outshining everything because the physical crunch is real. That's manipulation 101, folks, and now it's coming apart at the seams. Let's break down exactly what happened. In early October, JP Morgan, accused of rigging precious metals, flat out told clients, no silver for delivery this month. This triggered a chain reaction. The London silver market, structured by the Bank of England to mostly trade promissory notes instead of actual metal, verged on collapse. Physical delivery requests on banks are defaulting left and right. Analysts like David Morgan have been warning about this. Bullion banks are going all out to suppress prices, but the physical shortage is global. Why JP Morgan specifically? They're a massive supplier to India, where demand exploded after a temporary dip. When Indian buyers came knocking, the vaults were empty. The Shanghai Gold Exchange is seeing the same thing, short sellers paying deferral fees instead of delivering metal. This isn't isolated, it's systemic. Bank of America called it a state of seizure in the London market. Prices spiked dramatically in months, and the pressure hasn't let up. COMEX banks are failing on nearly every physical request, but this isn't a mistake, it's the first major crack in the facade. Posts on X are buzzing about its users, pointing out the LBMA is in deep trouble and warning of a full silver market collapse. Even analysts have been questioning whether bank stress tests account for metal defaults. Spoiler, they don't. Imagine waking up one day and your bank saying, sorry, we can't give you your money. That's essentially what's happening with silver right now, and it could spread to other areas next. Here's where it gets really interesting, the stuff the media and banks won't touch. First, the manipulation runs deep. Bullion banks have been shorting silver for decades, creating a fractional reserve system where paper promises outnumber actual ounces by 100 to 1 or more. A default like this exposes the whole fraud. Remember, it went 10x after similar contract issues. Silver could follow suit. Second, central banks are deeply involved. The Fed cut rates multiple times in 2025 amid internal divisions, while countries like Brazil and Japan hiked. There's everyone else slashing rates to prop up a failing system. Why? Dollar dominance is fading. Silver doubling in price this year isn't random. It's tied to eroding trust in fiat currencies. Third, The supply crunch has been building for years. Some say deliberately. Mines aren't ramping up due to regulations and costs, but there are whispers of hoarding by elites and governments. China forcing deliveries, US banks on the hook. This could trigger a debt cascade. Silver default leading to gold issues, then broader bank failures. A full confidence crisis isn't off the table. And the biggest thing they're not telling you, India might get blamed in some reports, but they're just demanding what's owed to them. The real issue is the banks who've gamed the system for years. This could pop the everything bubble stocks, bonds, even crypto, all tied to cheap money and suppressed precious metals prices. If silver hits $65 or beyond, as analysts predict, inflation could go nuclear. What if this default is the spark for the next major financial crisis? They're keeping quiet because widespread panic would empty the vaults overnight. So what does all this mean for you? In the short term, silver prices are likely to keep climbing. Some banks have already revised forecasts higher for 2026. The volatility is your opportunity, especially with unrelenting industrial demand that could push it to $100 or more. Long term, this erodes faith in the entire banking system. If a giant like JP Morgan defaults on silver, what's stopping issues with your deposits? The smart move is to diversify now. Buy physical silver coins, bars from reputable dealers, not paper ETFs that could disappear in a real default. Stack while supplies are still available. Dealers are already reporting shortages. Protect yourself by hedging with real assets. Follow trusted analysts for ongoing updates. And always question the mainstream narrative. They're downplaying this as a temporary market imbalance, but it's a massive red flag. Don't be the last one holding nothing but paper promises when the music stops. Act now, or you might regret it later. This JP Morgan default is the first domino in what could be a much larger fall. The supply crunch, delivery failures, it's all pointing to a historic shift in wealth. What they're not telling you is how fragile the system really is, how deep the manipulation goes, and how those who prepare could come out ahead. If this opened your eyes, smash that like button, share this video with friends who need to hear it, and drop a comment below. Are you stacking silver right now? What's your price prediction for 2026? Subscribe and turn on notifications for more red alerts on finance, precious metals, and the truths they're trying to hide. One last thing before I go. This video is for educational and informational purposes only. It is not financial advice, investment advice, or a recommendation to buy or sell any asset or security. Always do your own research and consult with a qualified financial professional before making any investment decisions. Markets can be volatile, and past performance is no guarantee of future results. Thanks for watching. Stay vigilant, stay stacked. Peace ouchie.